All right, guys, we are back for another episode of the BLD Financial Podcast, and we are lucky enough to have a legend in the house today, Vince Gaetano. Vince, you have been in the business for a lot longer than we've been in the business.
A little bit too long. I don't like talking about it too much, to be honest with you.
Well, you wouldn't be able to tell by your looks.
Oh, it's been 35 years. It's
35
been a long
years.
time.
You've seen all the cycles.
Started in early 90s with TD Bank, and we were meeting up with bailiffs, taking people's homes away. So had some interesting stories there and had a lot of fun learning the hard way, knowing how bad it could get. And I think that's what's driven my cautious approach is seeing how bad it could end a long time ago has probably driven me to be a little bit more conservative in lending and stuff like that. So I could see the signs early on in my career.
Yeah, I could imagine, a lot of the craze around real estate, I guess, over the last maybe 6, 7 years, people hadn't gone through the cycles yet. So, somebody who's gone through the cycles, who's seen the signs, you've seen the frothiness, you've seen.
It's been a long run, right? So like it just continuously went on and on and on, 15-year run. And like I was always preparing for the rainy day. And sure enough, it came hard, fast, and caught a lot of people by surprise who hadn't seen the ugly. And I think that's the problem is we don't do a good job as an industry to outline the other side of the equation that could go very bad fast and impact families.
I think it's something like you see even today, especially with social media, right? You always see the bright side of it. Very rarely do people share, the losses or the downside. Every once in a while you get either like news headlines, some name pops out, or you get somebody who's actually willing to share, some bad stories. But yeah, it's a lot of the shininess and the glory of it, which I understand because people use social media and the marketing to try to get into, JV partnerships, finding investors, like the characteristics you want to advertise there and kind of show off obviously are going to dictate how your partnerships are going to go, but it's definitely not all sunshine and rainbows.
No, it isn't. And I get a lot of comments on my social media feed that I'm too negative, but I'm just going off of data, trends, and facts. And, if you're looking for the cheerleader, I'm not it. I'm going to try to hit you with the realities of what's going on in the market. And that's the idea, is to be real with people so they can make informed decisions and understand what the ugly looks like. Yep. Because it's not fun when you're in it. And, I'm dealing with a lot of compassion fatigue these days because of all the people struggling, dealing with problems. And we're trying to solve these situations. And it's tough. It's tough giving people the reality of what they're faced with. And they got to make tough decisions that aren't fun. But, a lot of people just think it's going to turn around next month, next quarter, in the spring. But it's not going to happen.
Sometimes it does, though. And I obviously it depends on the situation, right? There's a wide range of situations we could be talking about here. But I feel like real estate, we could like jumping ahead a little bit, but you getting into more like the investor and the bigger guys, like sometimes it is just like hanging on until like, hey, next quarter, one more thing.
The big guys with cash are going to do well. Like if you're hanging on the cash, you're going to find treasures all over the place. But with that comes with a lot of pain on the other end of that equation. So we're dealing with a lot of folks that are dealing with cash flow crunches, maybe a job loss, these mat leaves for 18 months, as much as, socially people think it's a good thing. When you go from 2 incomes, no kids, to 1 income, 3 mouths to feed, and hope you don't have twins or triplets, it's expensive. And not everybody has a government job or a teacher's job that tops you up to 95%. So it's a grind. And seeing the cycle of how people built their families over the last 35 years, it was a trend where you have a kid, go through 6 months or 12 months, because I've been in the business long enough where mat leaves were only 6 months and 12 months at one point, not 18. People then refinance again because houses went up in value and they were able to do it. Like at one time, CMHC offered refinances to 95%. They don't do that anymore. But I could tell you that that was a significant trend after someone went back to work after a mat leave to refinance all the debt they carried. And it's tough now. You can't do that anymore.
Unless you built a garden suite in the backyard in your time while you're on your mat leave, but yeah.
Well, that's almost it. It's like it's almost like a bad hangover. It's people were drunk off of the appreciation of the assets over 2 decades. It was, even 2008, we didn't really see anything that was
Great run.
majorly impactful. Yeah, amazing. But like, it also kind of created a false reality, for a lot of people. People weren't having conversations about, economic data and policy decisions and CPI. And it wasn't really until, I guess, COVID, when, major policy decisions kind of threw a wrench into, rates, and we saw huge variances in either values or rates, and everything kind of changed. And
Well, social media itself, right? Before we used to rely on just newspapers and BNN for economic data, and now you have a treasure trove of data and real time information from X and social media. So it is a different market for sure, and I think one where people could react a little bit quicker if they can disseminate through all the noise and get to the data and the facts. So that's what we try to do. We try to help people with understanding where the market is today and making the best decision for themselves.
Are you finding that your average consumer is more informed now? Like, they have a little bit more knowledge now because of that? Obviously, you do a good job of telling the world that, and we try our best to do the same thing. But you finding that because of all the information available, that they're actually more informed, or just from you having the conversation?
You know what, Josh? I think the reality is there's too much information. People can't figure out what's true and what's cheerleading. And there's a lot of people that come in with a lot of preconceived notions of where the market's going, and it's wrong. But you try to make sure that you give them facts, you try to give them data, and you try to let them know what the options are for them, because a lot of them just are dealing with data overload. Like, they're just seeing so much commentary, details, and they don't know who's right and who's wrong. They're just trying to figure it out. And that's what we try to do. We try to help them understand what's going on. And I'll tell people, don't buy. Hold off. Stay with your current lender. There's nothing to shop. And I think that honest approach is surprising to them, especially when you tell them that, you got a good deal. Like, you don't need to continue shopping this thing. Like, you're good. And they're a little bit taken aback, but I think it really hits home that they're dealing with the right person.
Well, let's talk about it. Let's talk about the hard truth then. I think it's important for everybody to talk about. I mean, an industry expert like yourself, we see the commercial side and we have our finger on the pulse. You own a MIC, you lend money for a living. What does the short-term future look like? I think a lot of people would want to know.
Well, I still think everybody needs to live under a roof. So they need some place to live, and they got to come up with the reality of what's best for them. And there's a lot of people who think, well, the market's going to go down, I could still afford a house. And today, more than ever, it's becoming harder and harder to qualify for a mortgage. The stress test, I think that's the superhero in this mess, because it did create a bit of a gap for people to deal with potential increases and whatnot. But at the same time, I always struggle when I talk to clients and ask, how long have you owned your house? And 10, 15 years. I said, well, what'd you pay it? I paid $550. And sure enough, it's worth $1.5 million now, but they owe $850. And you sit down and you say, okay, outside of a major event, how did you have this house that you bought 10, 15 years ago for $550 and now you owe more? You have a fundamental problem of spending more than what you make.
You got 2 Lexuses in the driveway,
right?
Vacations.
And I think that hard truth is a struggle for a lot of people. And I become demonized by telling it and outlining that, they might have a problem. And I'm okay with that. Like, I sleep at night. Like, I tell it like it is, the way I see it, I call it. And, a lot of people have problems with that.
That's why they say it's a hard pill to swallow, though. It's not, looking in the mirror isn't always fun.
No. And, we think that it's going to be tougher for people to own homes, especially in the city. I think people got to be realistic that maybe moving out of the city, if they have a digital opportunity to work from home, might be the better solution. If you want balance, more and more people are moving out. I think that's smart. I think people want to take control of their lives. They want to balance for their family. And maybe the city's not everything it's cracked up to be. Like, it's just becoming a bit of a mess as time goes on, to be honest with you.
Mm-hmm. I think like the size of the debt consolidation space in the mortgage world like just shows how comfortable homeowners have been over the last 20, 30 years, whatever it is, with home prices just kind of continuing to go up. And there's never been that worry of my value is not going to go up. It's a home, I bought it, like this is my retirement plan, this is my pension plan, the values are going to go up every single year. To your point earlier about individuals going and mat leave and coming back 12 months later and refinancing, there was a comfortability with that. And I think Canadians and obviously a lot of people worldwide, I mean, we get very comfortable with certain types of patterns, right? Like even just where interest rates were around COVID period and compared to where they are today. They're still pretty cheap today when you take a look at where things are at. But
absolutely,
you still have people saying, oh, rates should be back down to the 1% rates, the 2% rates. Like we get adapted and comfortable very quickly with a certain thing. And I feel like we have a hard time exiting that pattern. And it leads to changes in just being able to think about right and changing your thinking moving forwards. Again, to the point of using your house and the value going up, that's not the case right now. I mean, we're still struggling with home values. Is real estate going to continue to go up in value incrementally, like year over year in the long term? Yes, but just not at the same amount that it had been definitely over the last few years after COVID. But even before that, I think we're still going to play some catch up.
It's interesting. I did the CP24 Hot Property Show for almost 20 years, it's like 19 years and a bit. And early on, before 2008, I think it was 2005 or so, Ann Romer was the host at the time. And I remember we just went below 5% on the 5-year fixed. And it was a watershed moment. Like seeing a 5-year fixed rate below 5 at that time was like, wow, this is incredible. Like lock in if you can, because we'll never see this again. And then we got used to, ZIRP, right? Zero interest rate program, and we brought it down. And in looking back, I really think CMHC failed us because I think it was an opportunity for them to adjust GDS and TDS ratios when rates went down, right? Because what it allowed people to do was borrow more than traditionally they could because of rates coming down. And understanding that may have been temporary could have created a major problem up here. We're unfortunately not protected by 25 and 30-year terms as the states are, right? Like I have relatives who are in the lending business in the States, and they can't do a refinance to save their life because no one's going to break a 25-year rate.
Massive IRD.
Well, there's no IRD. Like there's just,
Is there not?
it's all front-end loaded
Gotcha.
down there, right? But no one's going to break that mortgage and double up their interest rate. They're just going to sit there and renovate and not move. And we don't have that luxury here. Like every 5 years, there's an event.
Do you know why?
I think we don't have a market for long-term instruments up here. Like the 10-year is probably the extent of it. And it doesn't really exist in the residential market, right? Like all the MBS is all 5-year money.
I assume it has to do with just the bond market in general and relative economy of Canada versus the US.
We're not that big enough to gamble on a 25-year term.
Yeah, it's it's like what, 20% of how long we've been around.
Well, that or it's
So it is a challenge, and I think people need to understand how impactful a rate increase could be. And if you talk to everybody who bought in late 2020, early 21, when rates were just at a pittance, they never thought they'd
money.
see these rates at renewal, and a lot of them are struggling. Like it is not fun to see $1,000 increase to your payment which in GTA is the norm. So,
Well, it's tough too when you got Macklem like during that time period telling people, "Hey, rates are going to be low for the foreseeable future. Make your plans according to that." And for the average consumer household, like owner, like maybe not the most financially, like educated in terms of mindset. Like that's why you have certain people in power to help, give advice and stuff like that coming from the Bank of Canada. I mean, you would assume that's going to be,
okay,
knowledge that you can go upon, but
I agree. But where was our industry harping on paying down your debt?
Yeah, none.
With rates at these record lows, here's your opportunity to pound down your debt.
Yeah.
Like I always use this example. If rates are 5% and you owe 200 grand, if you could get to 100 grand balance before that rate doubles to 10, your interest cost is exactly the same. So when rates are at 1.5 or where they were, you should be hammering that fucking debt to zero as quickly as you can.
Absolutely.
Right? Because the day of reckoning's coming. And we all knew we're never going to see those rates again. So where were we as an industry, as professionals, as advisors, as planners, to say, hey, get rid of this thing?
I think it was maybe on the flip side. It was debt is so cheap you can
Borrow
acquire
as much as you can.
assets. At least on our end, it was you can acquire additional cash flowing assets that are going to now help you grow wealth. And I think, obviously, if you're taking variable debt or whatnot, and you did spend it on something that wasn't going to either cash flow or provide you a return on an investment, it was a terrible thing to do with your equity.
I think it's also like what we were chatting about just before we jumped on, but like that sense of like, entitlement, but also just like not being able to wait, right? Like not having the discipline to wait. You come out of a tough period, all of a sudden things are super cheap. It's like, I deserve to take this vacation. I deserve to have this stuff. Like, there is a little bit of that entitlement type sense and that lack of discipline to wait for, to be able to buy that thing that you want and push it down the road, right? When I think rates hit that, it was, I deserve this vacation. Investors leveraging during that time period, I think, is obviously a different topic. But for the average household owner, I think they look at it, they saw it as a period of like, hey, I can take a breath now. Like, let me get some of the stress off. Let's go on that vacation we've never taken. And again, they're assuming, that the debt's going to stay like that for a few years, and it kind of did, but then it shot up 400% afterwards.
Yeah.
And
like I think the mistake the Bank of Canada made was in March 2020 with 3 50-point rate reductions in a month.
Yeah.
Like that was not needed. You could have provided other relief. I think the interest payment deferral, the mortgage payment deferral was a wonderful program that could have solved a lot of other issues with inventory loans and businesses that are dealing with the COVID issue. That would have been a better solution.
What's the main reason why we're in the situation we're in? Massive levels of inflation cause policy rate increases.
Exactly.
If you didn't do that, we arguably wouldn't have had the current situation that we're in. And now we're just in a back and forth kind of policy decision situation where you have to cut rates to fight inflation until maybe it stabilizes out. But
It's going to be a challenge.
knee-jerk reaction, though, right? I mean, the Fed did it in the States. The whole world cut rates instantly. Hindsight's, I guess, 2020 at the time, but I guess everybody thought maybe it was the end.
like the problem with like the Band-Aid solution theory, though, right? It's like reviving someone, with defibrillator, and then you got to try to bring their heart rate back down, but then it falls too much. Now you got to bring it back up, and it's like when you're always playing like in the extremities, and it's a further conversation, right? Like financial literacy, the fact that it's only just being brought into like middle school programs. That's a giant issue that's never been a forefront of education, because that's a leading issue.
Financial literacy is probably the biggest thing that I focus on in all my podcasts and posts and whatnot. I've always claimed to try to help people understand the bare minimum. It's sad many don't.
Mm-hmm.
Like you can't go into a store with $100 and leave with $150 worth of goods. Like it doesn't work. And people don't understand that. And I think one of the biggest mistakes people make, and I did a post on this, I think it's going to come out next week, is saving $2 to not get a bank statement mailed to you is the biggest fucking mistake people make, because they don't see exactly what they're spending. And as much as it's online, when you look at your phone, you're only seeing 4 or 5 transactions at a time. You're not seeing 4 or 5 pages of where your money's going.
Get that 90-day statement and not just, you know.
Yeah, and like, you know, when we're trying to help people who are really dealing with cash flow issues, we always say, bring in 6 months worth of bank statements and credit card statements. I had one client, he had $3,000 in Uber charges, both travel and food-related charges in a month. And he couldn't believe it. And he had auto pay, like pay your credit card in full from his account. So like he never had money. Like he goes, I can't believe this. And he didn't realize that all 3 of his kids and his wife were on his credit card using this thing. And all he was being notified was, you know, $8, $12, $18. But every day it's 4, 5, 8 transactions.
That's crazy.
And he couldn't believe it. And it's like, don't you look at your statements? He goes, I had to figure out how to print them off. Right? So how many memberships? How many subscriptions? How many things that you purchased during COVID when you had nothing to do, you bought and you've never canceled them? Like, I go through that exercise, people always find $200-300 worth of charges a month.
That's
we were just talking about $200-300 on the way here. Like, that's $300 a month is a lot of money.
It's a
for
lot
a
of
lot
money,
people,
right?
Yeah.
And that's after tax.
Yep.
Right? So if you're in a 40% marginal tax rate, that's like 500 and change.
Yeah.
You have to earn to spend that. So, you know, it's financial literacy at its core, helping people understand how to be prepared to be a homeowner. Like, I never talk about mortgages on my show. People don't give a shit about a mortgage. They want to buy a home. So how do you help them buy a home? You help them with tax-free savings accounts, home buyer programs, first home savings account. There's all these tools to help them achieve home ownership. And yet people seem to be surprised when they hear about all these opportunities and tools.
So
it's interesting.
So in the future, I mean, let's say we're talking to a 21-year-old right now, somebody getting into university, you know, is buying a home the play? You know, right now, if you were 21 again, would you do it? Would you find a way to save up, you know, 5% down and you'd buy a home in today's market?
100%.
Yeah?
Yeah. I would. It would be harder. My kids all want to be homeowners. Who wants to have a condo, who wants to have a townhouse, who wants a house. They all strive to be homeowners, and it's through education, savings, taking advantage of the tools ahead that are available to them is how they're going to get there. It might take longer. But, you know, I always marvel at the fact that people don't have patience because of social media. Everybody wants it now, right?
Oh, yeah.
And I always use this example to my clients. You know, the RESP is a wonderful tool, right? The Registered Education Savings Plan. You start it when kids are born and you use it when they go to post-secondary education. That's an 18-year plan, 19 years. So why not take that approach with home ownership? Why do people need to buy a home when they're 25? If they start saving at 20 and use all the tools and say, okay, I want to be a homeowner by the time I'm 30, it's possible. And social media has become the instant gratification that you pointed out earlier, right? Everybody wants it now. And, you know, I think it's still an admirable thing to dream about. I think it's possible, but it's just going to take a little bit more time.
Yeah, I mean, for the average person, I think there's a lot of people who are in the investment space who, you know, would say that don't buy a home. They say, you know, a home's a liability. That, you know, every time you have to, you know, make a payment.
Because they're making clicks on your money that they're managing. They don't want to lose it.
No, but
They're all property managers. That's what it
that's
is.
right.
Yeah.
I mean, owning a home, you know, I guess it's one of the only times in our lifetime in Canada that you can sell something, an asset, without having any sort of tax. You know, you can grow tax free. It's a great way to be able to, you know, force save over time as well, as long as you.
Well, we're not blessed with a great pension program, right? Like CPP in old age, at the end of the day, is going to be $20,000 a year.
Yeah.
if it even exists by the
Yeah.
time some of these folks retire. So they need that tool, and usually the home is their retirement plan for the most part, right? So it is that tax-free tool that people could build wealth, and it's noble. And I think for some, it's just out of reach right now, but I think they got to look at the long-term play.
It may almost seem like backwards, when you talk about someone not being like financially savvy, but like for those who aren't as, investor savvy, financial savvy, like buying a home is that, they call it like the forced savings account, right? Like you're making your payment every single month. You are putting down that principal payment, like you're building the equity in there. So for someone who doesn't have maybe the extra cash flow to put into investments or just the financial knowledge to do it, like the home, it does act as that, forced savings account, that forced investment where over a time of period, you are going to get something back from it. And it's a relatively safe investment compared to stocks, cryptos, other stuff like that, for sure.
Well, and you also, I'm a big believer in the Wealthy Barber book. Like pay yourself first is one of the major tenets of that book. And if people just put 10% of their paycheck away before they even spend the rest, I think if you set it and forget it, you're going to save quite a bit of money. And today it's more difficult. People are under pressure to keep up with the Joneses, live a certain lifestyle. There's ways to do it. It takes discipline, some budgeting, and some financial literacy. And that's what people should be striving for, is to just be informed.
Yeah, and I think it's a whole conversation on its own, right? Like paying yourself first, like, starting out and sitting down and taking a look at your finances and figuring out like how much extra cash flow do you have after all your bills. If you don't own a home right now, you're just renting, what does that look like at the end of the day? How much can you save? A lot of people are probably in a position where saving is like $300-400 a month maybe, right? Or maybe $1,000 if you're in a better situation for the middle. And it's like, if you're at that point, trying to save that stuff is challenging. Like saving $500 a month, it's a tricky thing to do. You're putting that away for a rainy day type fund, emergency fund. You're not putting that into a stock or some sort of crypto. So, the first piece is like, you got to start trying to figure out how to make more money as well too. Like if you are truly unhappy with the way things are and you want something more, like you do have to figure out how to start making more money on the side, whether it's getting another job, starting your own side business, trying to figure out how to make that work, because you're not going to be able to just save your way there in today's economy with where inflation's at. And the wealth gap is just going to get larger and larger. And if you're someone who's sitting in, in the middle or lower income and you're sitting on Instagram, you're going to start seeing, in relatively less wealthier type individuals becoming more wealthier because of that gap. Those who have a little bit more money that can make the investments, they're going to start buying the stuff like that. That instant gratification and social media, it's going to become extra dangerous as the wealth gap, I think, gets expanded.
I saw this crazy stat the other day, and it was something like 8 or 9% of the population in the United States owns like over 80% of all the equities, the entire equity market. The top 10% own 80% of the entire equity market. The middle own like 10, and then the bottom, something like 30% or whatever, own like 1%. Like that gap, and as you were saying, it's just going to continue to grow. And I think to your point about just like, being financially savvy, if you're not there already, you don't have a handout, you don't have a gift from a family member, and, you're not there. I mean, Aaron and I weren't there. Like, we had to save our way up to being able to buy a home. And, you have to either start making some really tough decisions right now, because the next little while, we're at sky high valuations on everything right now. Crypto is all-time high. You have gold at all-time high. You have the equities at all-time high. We're cutting rates into all-time high cycles. Usually rates are massively inflationary. So anybody who owns these assets are going to be doing really well. Like I don't want to alarm people, but you probably don't have an incredible amount of time left. Like that, the middle is shrinking, and it's shrinking quite quickly. If you don't own the assets or you don't have these things, I'm not saying rush in to go buy a home if you're not ready to buy a home, but like the economics behind what's happening and what has happened over the last 18 years since 2000 is astonishing. We've lost a significant amount of our borrowing power, at least as a Canadian dollar. The American dollar, is doing quite well relatively to the situation that they're in right now. But, I think like the place in which we grew up in is not going to be the place in which, our future.
No,
absolutely not. The middle class is not going to be middle class anymore. It's And it's kind of a scary realization of the urgency of what is happening in front of us. I mean, you can see it materialize even 2021, from grocery prices to now, you're 30-40% more. I can guarantee you didn't make 30-40% increase in your revenue or increase, in your salary. So I think like also just kind of maybe going back to, being informed, understanding how economic policy works, understand what's happening with the dollar, you know, why is the United States, spending more on their interest payments than they are on, national defense spending, and how does that go towards, the cost of your dollar over time? Like understanding the currency, I think it all comes down to at the end of the day is like, how does this work?
Yeah, like the macroeconomic data, a lot of people don't understand it. And what I try to do on the show is try to disseminate it and try to help people understand how it impacts their lives, like how it impacts the average homeowner, the average household. And, I try to simplify it as much as possible. I use a lot of Ben Rabideau's data because he provides really good quality data.
He does.
And then you try to just dumb it down. I hate using that word, but you try to just simplify it for people to understand it very easily. And I get a lot of fulfillment from people who call and appreciate the comment, the posts. And I didn't really see it that way, they say. I thank you for helping me realize how that impacts my household. So I get a lot of joy when it does help that one family or two, and they share their story. But it's just trying to get all that information overload, and pick up a couple nuggets that really helps a family figure out how this impacts them. Because a lot of them don't understand. They don't understand some of the words in these BNN presentations and clips, right? So it's education. Education's always been my foundation. I if you go through 19 years of shows on CP24, never did I sell anything. I never said, hey, call me, I got the lowest rate. It was always, this is how the market's impacting you, and this is how you should do it, and you should consider this and have these options, and hope to see that they see the light.
Yeah, and I think that's the same, like, I guess for some of the younger guys, like it's, the Gary V type model where it's, give the value, right? I mean, when we first started doing or content, like our thing was we didn't want to gatekeep it, right? Fill out the application, give us your SIN number and all this stuff, then we'll tell you the secrets to figuring it out. It's here's everything that we know about how to get into a mortgage, how to invest. If you find it helpful and you want to work with us, great. We'd love to work with you. But if we can just help you understand, a little bit more about the process, be a little bit more informed with any sort of conversation that you're having with a broker or a bank, whether it's us or somebody else, that's a win. And as much as we can harp on social media for having a dangerous side, I think there is also, a huge upside to it. I mean, you've never had more data at your fingertips than what you do right now with guys in the professional space trying to actually help you understand investors, trying to help, hey, here's things that you could invest in long term. This is what it looks like. Financial strategies, business owners. It's easy to, trying to help you understand how easy it could be to start your own business. And it's scary, but, and hey, in 5 to 10 years, you could double, triple your income. You could have that freedom. Like there's so much at your fingertips right now to help you that if you really do have the drive, it is all there.
It's hard for some people, right, to delve into the space and provide content. It's hard to try to be relevant each week, but discipline and authenticity is going to win the day. So if you are committed to it and you are constantly putting out content on a regular basis that people can rely on, you will grow your tribe. And everybody has their own tribe, whether it's 20 people, 200 people, 2,000, or 20,000. Everybody's got a tribe that people rely on, your info. And, it's noble. Like, keep on doing it. Like, you're providing good content, but there is an ugly side. My son's a big influencer. He sat me down, and when I was concerned about some of the comments he was getting on his posts, like, he was getting millions of views. Like, he's got 4.5 million followers. And
good for him.
And, I was concerned about some of the comments, and he goes, Dad, they don't all like me. They don't follow me because they all like me. Like there's people that just, their job is to just throw hate and
Yep.
and criticize and throw shade at you. And I kind of thought about that for a minute. And he said, just keep on doing what you're doing. People who are complaining and are criticizing just want to be you.
Yeah.
So there is an ugly side. I've seen it firsthand, but it doesn't detract me from continuing to put it
Even
out.
Joe Rogan talks about it. Like the billion view guy, he's like, I don't even look at comments anymore. He goes, I stopped looking at comments like years ago. He goes, it's all hate.
Well,
It's not positive.
I do look at my comments because some people ask questions,
Yep.
and you got to try
Situation,
to provide
but
them
yeah.
that everybody wants to share. But hey, it's part of the territory.
Yeah, for
You know, there's
sure.
always going to be somebody on the other side of the coin. There's always going to
Absolutely.
be somebody with an opinion. You know, there's always going to be somebody who the people who've been calling the collapse since the 90s, they're commenting on every single
Yeah.
post that anyone's ever done saying, I told you so. So,
It's part of the territory.
it's part of the territory. Yeah, we get a lot of satisfaction out of creating content for people. You know, if they call us and they'll be like, we've either been watching your videos for like 5 years or like, we listen to your podcast. I really like this thing. And like, it opens up like a level of trust, but also like a level of, understanding that, they understand and you understand what's actually going on. From a business perspective, probably one of the smartest business decisions we ever made was,
for sure.
giving information away for free. And we weren't very like mature in our business at the time of making the decision. And it was a very conflicting decision because we sat there, we were like, oh, what if like we give all this information away and like other mortgage agent comes and watches our videos, and we were just so concerned about it, but it's not the case.
No, it's not. Like my son did a presentation to a bunch of brokers on social media last November in Costa Rica for one of the events. And one of the things he said was social media will now be your business card. Your clients and people looking for you need validation that you're credible.
Yep.
So the more content you have out there is just an additional validation that you know what you're talking about and your value proposition is solid. So I don't think it'll hurt you. I think it'll only benefit you long term.
Yeah.
And we're not in we don't sell pizzas, right? Where we put out content today and someone's hungry and buys a pizza tonight. Our cycle for purchasing is very long. So the more content you have out there, it will just reinforce the credibility, the eagerness to deal with you or want to deal with you down the road. And it's just a form of validation that you know what you're talking about. So keep on doing it.
Yeah, and it's a bit of a karma thing too. Like if you're putting out true, genuine content, trying to help people, you're eventually, whether or not it's specifically to make money or not, you're gonna get some business back in the end. If you're just putting out short-term cash grab type content, it's a really short business cycle. Like it's not lasting.
I can't tell you how many people have reached out and said, yeah, I watched your video on this. I can't remember I put it out. Like it was just so long ago. And you forget sometimes that it's out there and it doesn't go away. And people are trying to find out info. So if you got good quality content on certain subject matter, it's going to be picked up. And it may not be today, it might be in 12 months, might be in 2 years. Like, you're dealing with 5 and 10 year terms on these commercial units, right? So at renewal time, they're going to call.
Yeah. Well, it takes 5 years to save for houses. Like there's a period, right?
Yeah.
Either you're going through the renewal or you're an 18-year-old trying to save, for a home, or 20-year-old, whatever it is. Like there's time there that you got to learn and figure out how to do it.
Yeah, I remember actually watching your stuff during COVID. Your cool shirts, the shirts you'd always wear and stuff.
Yeah, that was my son. Like, I'll tell you a funny story. So the reason I got into social media was by mistake. So we're doing the CP24 Hot Property Show, and during COVID, we had to go online, and we couldn't take caller questions because of the complexity of the setup, because there's 3 people in remote areas and the host down at the station. So we had to take email questions. So my son said, Dad, why don't you do an Instagram live show after the show to take people's questions? I said, well, I don't know how to do that. And he goes, well, I'll show you. He bought me the light and everything. And we were promoting on the show that, hey, if anybody has any questions, tune into the Instagram live. And I called it the after show. And I started doing that and kept that going for 194 straight weeks until I just couldn't do it anymore.
Yeah.
So I'm going on YouTube. So, I sat there. I said, Mark, I don't know if this will work. He goes, Dad, you got to stop doing TV and get onto social. And I said, why? And he basically said, Dad, nobody my age knows what a cable bill is. Nobody watches cable anymore. That's my age. And I said, okay, well, you're young. Why would anybody listen to me? And he says, well, think of Back to the Future. You have information that we don't have. You're experienced. Just don't talk to us like a dad.
Yeah.
Yeah.
Relatable.
Right? And lose the suit.
Yeah.
And I said, well, what do you mean? He goes, why don't you just wear some crazy T-shirts or something? So that's how the crazy T-shirt story happened. And I try to find the most outrageous T-shirts of yesteryear, the Batman and the villains and all crazy stuff. So it's been a trend I've kept, and it's having a lot of fun with it.
Yeah, it's like a hallmark, It's,
Yeah.
it's like your mark.
It's fun, and when you're doing it for fun, it just makes it easier.
Absolutely. Yeah, guys, if you guys do want to watch or tune into your show, how would they go about doing that?
There's YouTube. I have a podcast. Owl Mortgage is a YouTube channel. Vince G Mortgage on Instagram, and I think Owl Mortgage is the Wise Old Owl Show on Spotify, Apple, and all the
All of them.
podcast channels.
Well, Vince, massively appreciate your time today. Talking to somebody who's been doing it as long as you have, who's been in the industry, who's a leader in our industry, we appreciate it. Our viewers appreciate it. Yeah, really appreciate your time today.
Thanks for inviting me. Listen, you guys keep on doing what you're doing. It's fantastic. The content is fabulous. Just keep at it and don't give up. It's a lot of fun being here, and I wish you guys well.
Thanks.